Okay, good morning traders. Welcome to my morning forecast of the euro dollar on the 20th of June. As always, we'll start on the daily time frames and work our way down, looking at key areas of market structure and high probability areas of interest. So let's start on the daily. We can see that the swing structure is bullish and the internal structure is bullish. We've got this key area of demand which was mitigated yesterday. So this is high probability demand because it's at the extreme of the internal structure. It's well priced. It was the demand that led to the internal break of structure and the swing break of structure. So when we mitigated that, we expected to have a reaction from there. You can see it more clearly on the 4 hour, where we've got the same swing structure. So swing structure is bullish, internal structure is bullish, and here we can see the demand that led to the break of the internal structure and then eventually the swing structure. So this was a high probability area to get a reaction from. We can also see that it's in the discount of the internal leg, so it was well priced. So yeah, we expected to see a reaction from there when we break the low. We now have this area of demand, which we can look for a reaction from if we come back into here. Okay, let's look at the 15-minute. So on the 15-minute, we can see that the swing structure is bullish. We've had bearish internal and bullish internal, now bearish internal, and now we've flipped bullish again. So this swing leg is the internal leg of the 4 hour. So we know that we've mitigated demand in the discount. So it's likely that this leg, the 4 hour internal leg, is complete and we'll see 4 hour highs. So now that we are in line with the swing structure and internal structure on the 15-minute, we can start to look for longs. We've got some areas of demand left behind when we had this reaction. So we can see that from this leg, here's our premium, here's our discount. We've got an area of demand which we have just reacted from, so we'll see how that plays out. But if we pull lower, we've got a couple of areas here. Got this area which could see the reaction from, but when we've got two zones close to each other like this, it's quite often that the first zone is used as inducement for the second zone. So traders will play this reaction, place their stops below here. We've already got stops below this low, so there'll be a lot of liquidity below these lows, which can be used to fuel the move to the upside. This area of 15-minute demand's also resting inside the 4 hour demand. So I can give us a second confluence that this is the area that's going to be used for the move. But yeah, we're just waiting for a pullback into a 15-minute demand zone. So we do have one here. So we could drop down and to a lower time frame, see if we can play the reaction. And if we pull lower, we'll just be waiting to see if we pull lower, we'll just be waiting for bullish order flow to kick back in and look to get into longs.